IFC, International Finance Corporation here in Ghana. They are a development finance institution. They've pumped over $3 billion into various private sector entities in Ghana over the past decade. And funny thing is, the past 3 years, they've spent a lot more than the previous 7. So clearly, they see potential in Ghana. And the sectors are varied, right? Agriculture, real estate, infrastructure, oil and gas, the rest of it. We're quizzing him on how to really use that to unlock an aspect of our development. We do know there's the World Bank, there's the IMF, there's the government and other sources of finance, but IFC have become a very important player in Ghana. So, Kel, thanks for staying with us. I want to come back to the whole macroeconomic point, right? The sentiment seems to be that, at least in the past 12 months, things are looking okay. I think the word they use is things are stabilizing. For a finance person, how long would you want to see such a thing before you start getting happy?
Look, trends matter, and the commitment to these results by the key stakeholders matters too. And so what we've seen is in short, very, very good.
Very good.
And it helps create confidence for both domestic investors and international investors. And we sometimes forget about it from a business perspective because maybe we're trying to seek some sort of subsidy for this or tariff protection or tax holiday. Where first and foremost, first principle is simply macro stability and strong GDP growth, inflation coming down, interest rates coming down, exchange rate not just coming down but staying stable. That helps businesses make better decisions and better long-term decisions. And this trend that we're seeing on the accumulation of reserves gives us some confidence that this could be sustainable.
Are all the indicators moving in tandem? So inflation, interest rates, deficit reducing, debt coming down, exchange rate also sort of. How important is the alignment? Because there's a concern about whether the exchange rate band we're seeing will last. I think it's 10 to 12 to $1, right? Yeah. How much time do you need to be convinced that this is becoming a hard trend? Because it's been a year. How much more longer do you want to see that?
No, it's a good question. I think that the real thing is that it's come down over the last 3 years, okay? And in the IMF program, and you read the semi-annual reports from the IMF, they're largely pretty positive, okay? And that there's the basis, that the reserves, that the GDP growth, and that the expenditures, on the expenditure side, I think, by the government are being sustained. Now, would we like to see more room on, say, on revenue collection by the government? That obviously that's also an important indicator of stability. I think that's one of the next steps they're working on. The exchange rate, I mean, when you talk to the business community, some people are happy with a 10 to 12. Some people would have preferred 12 or 13 and just 12 or 13 for 3 straight years.
They just want a number to be stable.
Exactly.
The up and down is too much.
Exactly.
Yeah.
Exactly. I mean, we always say that if you when it fluctuates, traders make money. When it stays stable, businesses make money.
Can you repeat that? When it fluctuates, traders make money.
Yes.
But when it stabilizes,
businesses
make
that
money.
Create jobs.
So we want the latter.
Exactly.
Not the former. What about capital markets and things like this, right? Because you also want a diverse range of sources of money. How do you see the Ghana Stock Exchange? How deep is it? How well oiled is it? What's the potential for that?
Look, in 2010, and I think the work started in 2006, but came to fruition by work by both parties historically. In 2010, Ghana created the private pensions. This is the seed that is now bearing fruit 15 years later of several $billion being held by the pension funds, which historically just owned sovereign debt. But now there is a cognizance of the risk of sovereign debt.
Of course.
And so there is a desire to obviously diversify rapidly, and seek alternative assets. So there's money here in Ghana seeking a place to go. This is just a unique opportunity by the stock exchange. And I know the leadership of the stock exchange, alongside the leadership of the SEC, are very keen to further move this needle forward. We've seen 2 IPOs, which is the first in the last 5 years. I think it was First Atlantic, or just public offerings, CalBank and First Atlantic. That's great. Okay, we're seeing a lot more interest on the bond market. And again, it's a bond that a business could potentially raise 7, 8, 9-year money in local currency that may not be currently possible via a bank. And so this is the era in the next few years of leveraging capital markets to help the corporates in Ghana, including local corporates, local Ghanaian companies, access finance they otherwise cannot access.
The concern about pension funds, though, is that a lot of the organized labor is very apprehensive what happens to their pensions. And I don't know if there's best practice as to how to use pension funds in a way that unlocks development but also preserves value for pensioners. So yes, we know Norwegian pension funds and Western pension funds do support a lot of good things here, but I'm not sure if there are West African examples of that. I think Botswana does have some good example. There's a lot of apprehension within the worker space when people talk about how pension funds can be leveraged, right? So as a finance person, I just want you to talk a bit about what that means, because I see a lot of resistance to that, because like, you want to touch our pensions to build a hotel? No way, right? But I think there's more nuance there than that. So just explain a bit how pension funds become potentially transformative if used well.
Look, this concern is correct, okay? Because obviously this is everybody, it's your life savings. We all have pensions, and we want to make sure that they are properly supervised. And so the pension authority is pretty strong here and keeps an eye on things as far as what percentage of assets can go in different asset classes and what are eligible and what are the required credit ratings. And there's a whole credit rubric there. And this is where maybe IFC might be involved, or our other DFIs might be involved in some of the first transactions, because maybe they will need a credit enhancement to help move them forward. For instance, one of my first projects was in Mexico, to help pension funds go into infrastructure, but they needed an IFC guarantee to make it creditworthy for the pensions, otherwise they were not allowed to invest. Same thing in markets in Asia too. So it's not unique to emerging markets, it's just unique to Ghana because we now have this opportunity that we didn't have 15 years ago. But between the pension authority, the SEC, I think we have some pretty good regulators in place to see this through. But at the same time, you have private pensions that are motivated by sustainability.
Correct.
So they want to make sure these investments are sustainable, which includes profitable.
And of course, transformative things like infrastructure, PPPs, toll roads, and the rest of it, rails, because people are thinking, oh, how do you, there are some investment that can unlock agriculture, right?
But Bernard, it could just be a local manufacturer. Maybe it could be DTRT2.
Wonderful.
Maybe instead of coming to IFC, they issue a bond, and maybe the pension funds buy the bond.
Of course.
And so maybe that's not infrastructure, that's just a company.
And you're prepared to play a role in the mobilization and also the technical work that goes into, because I think the IFC's reputation in terms of the track record will give a lot of comfort to some people.
That's our role. Our role is money.
Yeah.
But our greater role is mobilizing money.
All right.
Okay? That if we are in a company, what we're very proud of is once we're in a company, people that otherwise would not pick up a phone call from that company now call them to work with them, whether it's financing them, to do business with them, to buy from them. And so it's the same thing. So that we'd like to think that some of the companies we're working with, that if we're comfortable with them from a credit perspective, then maybe a pension fund should be too.
Interesting. 24 economy is a big discussion in Ghana. Some people feel this is the year it has to put up or shut up, right? Are you in any conversations with them? Do you see any promise in terms of mobilizing? Because they're talking many things, right? They're talking inland transport, they're talking infrastructure, agric corridor, they're talking export value addition. It's a major export development strategy, but I don't think it's taking off yet. Are you in any discussions with them, and how optimistic are you that we will see something tangible this year?
Look, with this government, including the 24-hour economy, Ministry of Trade and Industry, obviously His Excellency, we are united under this desire for more and better jobs, full stop. I mean, that's what this is all about, how to create more and better jobs from our perspective for people around the world, but particularly for those of us here in Ghana, and as you know, I'm a Ghanaian, for us here in Ghana, okay? And so we are aligned, okay? So whether it's supporting DHERTs, whether it's supporting large-scale commercial farms, whether it's supporting small-scale linkages, whether it's getting the port to operate 24/7 and clear for exporters, whether digitizing a lot of the regulatory such that when it's digital, it's 24/7, okay? To help make business work smoother, faster, more efficiently.
Is there money, is there mobilizable money for the ambitious projects that things like 24 economy talk about? Do you, of course you, and not talking about IFC money alone, right? Do you see appetite for Ghana if we needed? I've heard some of the figures we need to operationalize 24 economy, quite a lot of money. Is there money?
We are doing more than we were doing several years ago. And we are just one of many touch points. I'd like to think more money is interested in coming here. I know we IFC, we're seeing a lot more business proposals than we were seeing 2, 3, 4 years ago, particularly for some larger projects, in agriculture, particularly for some larger projects in infrastructure. You know, 2, 3, 4 years ago, we were looking at solar projects, 15, 20 megawatts. Now we're talking about 200 megawatts, 400 megawatts of solar. This is not just solar power, by the way. This is lower cost power. Lower cost, reliable power for business.
So this money is coming from abroad? The money you see?
Both abroad and locally. Recycled savings locally.
Do you do projects that involve China?
Look, we are keen on supporting viable projects here in Ghana, full stop. As long as they're with credible parties. We're very proud that, for instance, Sunda, which is a low-cost producer of laundry detergent, diapers, sanitary napkins, improving access and affordability throughout Africa with its primary operation here in Ghana, but servicing the whole sub-region. This is back to Ghana being a supplier to the sub-region. You know, they had a public offering in Hong Kong, okay? So you have investors in Hong Kong financing and creating jobs here in Ghana. That's amazing.
This is Sunda in Ghana?
Yeah, up in Malam Junction.
Because I ask because I do know that because of where the IFC is coming from, there obviously is competition for investment in the company, and China is the big geopolitical rival of the West, right? So that's where I'm coming from here.
I think it's we're all in it together. Okay, so whether I'm financing or whether somebody from China's there or somebody from Norway's there or somebody in the UK there, we're all trying to finance, which is good.
I see. Apart from 24 economy, any other sectors or any other agencies you see going forward potentially promising in terms of where we should be looking at, where you think good things are going to come from?
I think there's opportunities for more and more onshore value addition. Okay, and I know that sounds general, but the point is, you know, when you look around your house, okay, or when you look around your office or things, you know, we're using here today, there's going to be increased opportunity for more and more of that to be sourced here in the region, but in Ghana in particular, given its unique attributes in terms of infrastructure and stability. So that's where I think that's the future. And so, you know, 20, 30 years ago, how much of the cement was imported? Clothes, diapers, all imported. Okay, now more and more that's coming here. More and more things are going to be made here for Ghanaians and for people in the region, and then increasingly, because remember, you have some companies here, like including Sunda, that are exporting to Latin America, or DTRT that's exporting to the U.S. For markets globally.
Thank you for talking to us and thank you for what you do. Kelhofer is the senior country manager for the IFC here in Ghana. He keeps saying he's Ghanaian, obviously because he has many strong Ghanaian roots, including his family having stayed here. So yes, what's your Ghanaian name, by the way?
Kweku.
Wednesday. That's the day I was born too. Wonderful. Thanks for watching tonight's edition of The Point of View, coming to you from the offices of the IFC here in Accra. My name is Bernard Avle, and I've been talking to Kelhofer. We'll see you next time. Bye-bye.